Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. It has been a wild 24 hours in the media market, and we need to talk about what is going on and what you should know as an investor moving forward. First, let's talk about the headline. Tucker Carlson is leaving Fox News, and that cost the company $700 million in stock value, meaning the stock dropped, and that was a $700 million drop. It fell about 3% at the time that we are recording this. This is on top of the $787.5 million lawsuit that they had to settle with Dominion. I'm not going to go into all of why that happened. Basically, it was people not telling the truth on the network about the voting, election machines, all that kind of stuff, and they settled. It was a $1.6 billion suit. They settled out of court for $787.5 million. Now, that's one. Okay, that's one major story. Okay, fine, right? But then you also heard CNN has also let go of Don Lemon on the same day. Interesting, okay? Keep a pin in that. Then you had BuzzFeed News, which is a stock that has not done well. They're getting rid of their entire news division, even though it's Pulitzer Prize winning, meaning they wrote some amazing stuff. Yes, BuzzFeed, I know. Not what I would expect it, but they cut that. Okay, fine, right? Okay, BuzzFeed, CNN, Fox, and then you had the CEO of NBC Universal say, look, he had to step down for some inappropriate relationship stuff. And then on top of all this, you got Disney cutting another 4,000 employees, and some of those are going to be from ESPN. Media is not in a good place right now because the business model just isn't working. And I don't know in which direction media is really going to go. But here's the issue. They spent a lot of money on-camera talent, Tucker and Don Lemon for that matter, and me and you have a lot more options, some of those which are free. This being one of them, right? So you get to watch this video for free. But they're also spending a lot of money on content like Disney. The millions and millions of dollars, billions really, that Netflix is paying, that Apple is paying, that Disney is paying, they're spending so much more on content that I'm only going to pay but $8 when they really need 50 out of me, right? To be profitable. And that's just a thrown out number out there. But you know, just like me, I'm not paying 50 for Disney Plus and for Netflix and for Peacock and for whatever else is out there. That's $150 just between 3 apps. That's not going to happen. The economics, I mentioned this before, especially with Netflix, the economics of streaming and media business is not working out right now. And we have to be able to sort out what to invest in, what to look away from, and how to really analyze these situations. So Fox News, yeah, they're a publicly traded company, in case you didn't know. So too was BuzzFeed, or they still are now. We'll see where that goes because they're obviously struggling. And you'll notice on a lot of smaller independent media news networks, whether it's Vox, VOX, and others, they're kind of going through some growing pains because advertising dollars are falling off. That is the primary way that a lot of these media companies make money. They put out articles, they do videos, and then people will say, look, I want to make sure that my brand appears on this website, and they'll do commercials. Obviously, that's how they make money. Same thing here with Twitter. Same thing here with Meta, and even to a larger degree with Google. All of these media platforms make money from advertising, and as we have seen, because of the threat of recession, which again people have been throwing out there for a while now, because of the threat of recession, a lot of companies have already cut back on marketing spend, which hurts a lot of these smaller brands more than some of these larger ones, but they're all suffering. Elon Musk has already come out and said, I think a week or two ago, where he said the value of Twitter is $20 billion, which is half of what he paid for it. So pay attention to earnings, which we've already talked about, to see where media spending is going, especially for Google and especially for Meta. Because if people are not spending more on search ads and not spending on social media ads, they're likely not going to pay more money to be on a Fox News. They're definitely not going to pay to be on Twitter, and we'll see where Disney goes because you can't really advertise on Disney Plus, at least not today, unless they figure out that, hey, we need even more money, then they're going to have to do that. So just had to come out here and say, like, hey, the media business is broken when it comes to a business model. Now, the content, that's on y'all. That ain't my expertise. But the business side is a little bit broken. It is something that you do want to pay attention to. As an investor, personally, that's not a place that I would look to invest, because I don't know when the economics are going to make sense. What I do know is you can only have but so many players in this space, right? Similar to couldn't necessarily say a social media like that, but when it comes to streaming and media in general, you can only have so many players, because we, the people, are only going to pay for so many. Somebody is going to lose. Somebody is going to lose. I don't know if it'll be Fox, because apparently they just lost 1.4 billion, right? 700 million on the lawsuit, 700 million today in stock value. That can repair itself if the stock goes back up. But we'll see. So that's one area of it. And then you've got the Netflixes, the Disney Pluses, the Peacocks of the world. We'll see, right? And NBC lost their CEO. What are they going to do, right? How is that going to play into all of these things? And then obviously even with ESPN, which is owned by Disney, what are they going to do to streamline costs and make their offering package make sense? So for me, not a place I would really look to invest until this media market shakes itself out. Even when we go back to Netflix, remember we talked about last week, they attempted to do their first live event and it failed miserably. So how are they going to evolve if it starts to consolidate and we say, instead of having Fox, NBC, CBS, right, maybe we throw in Apple and then Amazon, and maybe we cut down and reshuffle how we watch TV, how we watch entertainment. Who knows, right? Same thing with YouTube, Google, and YouTube TV. We'll see. So it's an evolving space. I think it's very, very difficult to predict, and it's really based on who can spend the most money, make the most content, and really survive a time like this where everything has shifted so much just in the last 3 years. So pay attention to it. If you're looking to invest, it's not the space that I would invest in. I also would not invest in the banks. That doesn't mean you can't research it though. If you can research and find out that there's an opportunity, then feel free based on the things that you find. But for me, I'm much more of a defensive investor. I want to invest in what I know is working and what I know has the least opportunity to fail. I don't think that is media right now. All right, that is it for me. I will talk to y'all, I guess, tomorrow. I did 2 videos. I did twice the work today, so we'll see. But as always, you can catch me Insider Members Only. We just dropped a video, our latest video on our value model. So showing you how to say, hey, this company is making this much money. Here's the exact share price that I think this company is worth, and whether or not it is overvalued or undervalued, and whether it makes sense to invest in. So that is in there. Insider Members Only. Make sure you check it out. All right, that's it for me. Talk to you later.